Welcome to another live space with Oliver Velez. Of course, my name is Oliver Velez. I haven't done one of these in a while, so I might be a little rusty, but I think I'll be able to get my message across today. Some of you have actually been asking for this. Oliver, when are you going to do another live space? Well, here I am. And boy, what a topic do we have today. So, guys, come on in, make yourselves comfortable. Maybe even grab the beverage of your choice. Grab something to take notes with. This might be something that you might get a few pointers um, from my professional trading world that you might want to retain or so. All right. So I just want to make sure that I am actually loud and clear. You can hear me. Everything is okay. Let me see if I can even check that myself here. But if you'd be so kind, guys, just send me a message and let me know. Everything's okay, Oliver. We can hear you loudly and clearly. I don't want to start talk on this very important topic before I know that we're all good. But one last time, welcome Bitcoiners, welcome traders, welcome followers, welcome supporters, welcome haters, debaters, welcome high and low, fat and skinny, tall and short. Welcome everyone. All right, you're all appreciated. And let's get going. I don't know how to see your comments, but I'm going to assume that everything's okay. All right. Just one more time here. One more time here. And we will go. Well, still don't see your comments. I think that every time I'm live, like the comments that I see are somewhat delayed, but that's okay. All right. Emerging sound is good. All right, fantastic. Good. Good. All right, guys. So, where do we actually start? I titled this talk Jane Street, which is a very hot topic today. Jane Street is the reason for my losses. Yeah, that's it. That's the ticket. Jane Street is the reason that Bitcoin is down so much. Jane Street is the reason that my life is not the way I expected it to be. Yeah, that's the ticket. All right. Let's delve into this, guys. First of all, for those of you who are not aware, I have been in the professional trading space for nearly 4 decades. I started trading markets in the year 1981. I became a professional trader on Wall Street for many years. In 1986, I eventually started my own institutional trading firm in the mid 1990s. That firm also launched, my first firm also launched um, the second largest direct access trading company in the United States. I sold the operation for huge amounts of money at one point to Charles Schwab in 1999 into 2000, right at the peak of the dot-com bubble. I went on to form another proprietary trading firm that was dedicated to training traders all over the world and funding those traders all over the world to practice and employ an institutional style of trading with my own capital. So I fund thousands of traders all over the world that are dedicated to trading markets professionally, predominantly the equity markets, but I do have a professional forex trading team as well. So this has been my life. I have done nothing else with my life but trade markets financially. I started in the industry very young. I built up a fairly um, um, decent reputation in the industry. I wrote 5 international best-selling books on the topic of trading markets professionally. I've even had books written about my trading prowess on Wall Street about me. So not only did I write books, others wrote books about my Wall Street years. So I give you that background as a Wall Street professional that has become a passionate Bitcoin maximalist, if for lack of a better word. I give you that background because I want you to know up front that what I'm going to talk about is not um, third hand or second hand. What I'm going to talk about is what I have lived, what I know from my industry, my world. And I think it's time to sort of put to rest a lot of this nonsense that I see about the Jane Street narratives that are flooding my feed and everyone's feed these days. Okay. I think that's important for us to do. And so the crypto community on X has been building a theory, and this theory is not new. They've been building a theory since late 2024, and I understand why. But the theory is that Jane Street is allegedly running an algorithmic system that dumps Bitcoin every day after 10 a.m. Eastern Time. That's U.S. market open, or shortly after the U.S. market open, suppressing the price of IBIT shares at a discount. Now, I've heard this for years. All right. Um, Speculators sort of tie Jane Street's recent 13F disclosure, showing that it actually added 7.1 million IBIT shares in the fourth quarter of 2025, bringing its total position to about 20, I think it's 20.3 million shares worth. Or let's put it in dollar terms. They dramatically increase their IBIT shares, the the BlackRock spot Bitcoin ETF shares they boosted it by $790 million in just the last quarter of 2025. And this has been added to the long-standing rumor that James Street has been manipulating the price of Bitcoin to basically buy IBIT shares on the cheap. And guys, anyone in the business just completely right off the bat will just dismiss that. All right. But let me go on. The theory that exploded this week after the Terraform Labs bankruptcy administrator sued James Street for alleged insider trading tied to their 2022 collapse of Terra Luna. And also the India situation where I think their SEC is called SEBI, where SEBI in India has a separate manipulation case against Jane Street. So I want you to understand that what has culminated in this explosion of interest and allegations against Jane Street doing illegal things to suppress the price of Bitcoin is tied to several things. One, they dramatically increase the shares that they hold on their balance sheet of IBIT shares in the last quarter of 2025. They have recently been sued by the administrator handling the Terra Luna collapse in 2022. This has also made a lot of people aware of the fact that they were kicked out of India for nefarious practices on their exchange and doing manipulative practices, and had to pay a fine and was actually kicked out of the country. Now, what I will say is this: Jane Street is by no means an ethical firm. That I'm going to say up front. Ethics and Jane Street should simply not be in the same sentence. All right? As far as I'm concerned, they're turds in a way. I know them even more intimately than most. My son interned with Jane Street and was paid very well and chose after that internship to actually go work and trade for another Wall Street firm, not liking the sort of, I guess, the culture that he was in at Jane Street. So I want this set up front. I am no means a fan of Jane Street and their practices. But what I will tell you is that the narrative around Jane Street manipulating the price of Bitcoin and pressuring it downward to accumulate more IBIT shares at a cheap price for itself and BlackRock or what have you, that narrative is dumb. That narrative is blown out of proportion. And it's coming from, in my opinion, a state that people are down and out and are looking for, because Bitcoin did not do what they expected it to do, and they are looking for any scapegoat. And so in this case, it's not narrative driving the price as most people want it to be. It's actually price driving narratives. The fact that Bitcoin is down near 50%, most people are looking for a scapegoat. And Jane Street and all of its bad history is perfect the perfect scapegoat in this instance, and I admit that. But what is being levied against them is actually not entirely correct. So let me explain to you why the manipulation narrative is likely overblown here. All right. So the data doesn't actually support a systematic dump. So there's this idea, right, that um, Bitcoin that James Street has this algorithm that systematically dumps Bitcoin at 10 a.m. to 10:30 Eastern Time in that window, and they dump purposely at that specific time to liquidate overly leveraged traders, causing a cascading drop to the downside, where they then pick up the cheap Bitcoin around 11 a.m. or so. And that's the shares that they actually, I mean, that's the IBIT shares that they actually, or the Bitcoin that they actually have to marry with the share create the day before. So I want you to understand what's being levied against them. Oftentimes, when IBIT sells shares, I need you to understand this. When IBIT sells shares, those shares don't necessarily immediately correspond with Bitcoin. The AP, or the approved participant for this spot Bitcoin ETF, is responsible now for getting the Bitcoin at the share create price. So somebody buys BlackRock's IBIT spot Bitcoin ETF, and instantly they get a price, but now the AP has to get Bitcoin that corresponds with that spot Bitcoin ETF purchase. Now, here's the rub. This is not always instant. Sometimes the AP needs time to get the Bitcoin to match the share create that occurred with the purchase of the spot Bitcoin ETF. There's a time gap. This time gap can be hours to as much as a day. Now, we all know that Bitcoin can move dramatically in hours and certainly dramatically in a day. Just yesterday, we saw a 7% plus run in a single day. Now, when a firm needs to adhere to a price, they're locked into a price, but they have guaranteed a price to BlackRock's share create price. They have to now go get the Bitcoin, but they may not be able to get it very quickly or at the most reasonable price. So it might take them time. This time is a huge risk, which leads them to have to always hedge their position against a sudden 2 or 3 or 4, or in the case of yesterday, a 7% change in the price before they match the Bitcoin with the share create. So IBIT has to always be largely delta neutral, which means that if they hold $1 billion worth of IBIT shares, they're going to be that $1 billion is going to be offset with $1 billion in derivatives, maybe a combination of options and futures and so forth and so on, to make their position neutral. So whether Bitcoin goes up or down, they're not losing on their position. Now, what this activity is being misconstrued as being illegal, when it's the activity done on every single asset on planet Earth that has derivatives on top of it. If you have a long position, it is your fiduciary responsibility as a professional trading firm, as a professional individual trader, if you don't want massive risk, to offset that long position with a short position in the derivatives market. This is the ABCs of proper trade management in the professional space. So when people say that, well, we demand that James Street reveal the other side of their trade, because see, James Street has to reveal the IBIT shares that they own, because that is a security that's on their balance sheet. They have to reveal that in their 13F filings. But they don't have to reveal the offsetting derivatives positions that make that long position neutral. They don't have to report that. So there are now these crypto Twitter claims they should show the other side. They don't have to show the other side. You can almost always assume, people, that the other side is equal to the long side. If they report $950 billion worth of IBIT shares, you can bet your bottom dollar they've got $950 billion of derivatives hedge exposure on the other side. You don't even have to see it to know that that's what a delta neutral system is. And this is a basis trade for them. This is not a position trade. So when I see posts that say, oh, James Street just upped their Bitcoin holdings by $250 million, they know what's coming. That's an ignorant post, not on purpose, to think that because James Street increased their exposure to the spot Bitcoin ETF, that is a long position for them. That's not a long position for them. That is just, they had to increase the flow because of the operations. They had to increase their balance sheet of IBIT shares because of their AP operations, but they're offsetting that with short scenarios in the derivative side to keep their position neutral. They have to stay as neutral as possible. They're only looking to take change on every transaction. It is a basis trade. They want a couple of basis points every transaction, 1 billion times over and over again. They don't care if Bitcoin goes up. They don't care if Bitcoin goes down. They just want the frickin' spread. I have been in this business for decades. I know what a basis trade is, and I know what you have to do to pull it off. You have to stay delta neutral. So if you ever want to know what the hidden side of James Street's um, balance sheet is, it's 50-50. If they have to report the long side at 700 or 900 million dollars, then you can bet your bottom dollar that it's equal on the other side that you don't see. That's what a delta neutral system is. So there are two errors that I've seen in great form over the last couple of days on crypto Twitter. Number one, their increase in the IBIT shares is a positional stance by James Street. That's bullshit. Whether their share ownership goes up or down is a neutral scenario. They're not in the position or in the business to play up or down with Bitcoin. They don't care. The other thing is, well, they're keeping something secret. It's not freaking secret. So they have to report the long side to the SEC, which is IBIT shares. And then now you automatically know with a delta neutral system exactly what the derivative side is. They're not going to leave themselves exposed to a 3%, a 2%, a 1%, and certainly not a 7% move in one direction if they're not delta neutral. This would be suicide for them. So let me kind of systematically go over this thing so that you who are listening to me are head and shoulders above a lot of these bozos that are really unsophisticated selectionists. They don't like when some of these practices do add selling pressure, but they love when these same practices create meteoric rises in the Bitcoin price. Nobody's calling out James Street when the price is rocking, and this delta neutral strategy actually flips to drive the price more upward. No one's complaining then because it works both ways. They only complain when there's pressure being added. And we're going to talk about that in a little bit more detail too. So let's go over this. I think there was a post by Alex Kruger, which I liked a lot. I like Alex Kruger's page. If you can follow him, that would be a good thing. I think he pulled the data. He found that this 10 o'clock a.m. algorithmic thing that's supposed to give James Street or IBIT some edge is BS, right? I think he reported that that 10 to 10:30 window where they're supposed to dump Bitcoin, their cumulative return between that dumping period, 10 to 10:30, is like 0.9%. That's virtually nothing. And in the 10 to 15, the 10 o'clock to 15 window, it's 1%. So basically, Alex Kruger called this basically noise, which really it is. In the grand scheme of things, this is noise. All right. What I want to tell you all is this. One firm, James Street, cannot single-handedly drive a global bear market. I'm going to repeat that, people. One firm, one authorized participant in a global market that is multiple trillions. One firm can't single-handedly drive a global bear market. Get that in your head, please. All right? It's unlikely that any one entity can dominate a market as deep and fragmented as Bitcoin. Bitcoin is a very fragmented market. It does not trade in one centralized location. So whatever you do on one market may not necessarily be done on all the other individual fragmented markets throughout the world. How do you coordinate all the different fragmented Bitcoin markets in the world? How do you get every exchange to agree, every private market to agree in Bitcoin? You can't. You can only do shit like that if the market is centralized. And Bitcoin's market is not centralized. It's the most fragmented market on earth, which is a good thing. So what you do in the US on this particular exchange or what have you has nothing to do with what's happening on other exchanges and other pockets of liquidity in every other part of the world. In order to really manipulate it, you would have to collect all of those fragmented pieces, get everybody on board to do the same thing at the same time. What's the freaking odds of that? Almost zero. Now, there are certain strategies that amplify volatility, right? That and around the US market, and a lot of markets then sort of follow the US market. I will grant you that, but that in the grand scheme of things is small incremental noise. As I believe Alex Kruger pointed out so nicely in his post. Go check that out. People, Bitcoin trades 24/7 across hundreds of venues globally. Unless they all come together and agree, you can't manipulate it. Not in any big way. You understand? The idea that one desk at one firm controls a multi-trillion-dollar asset is dumb. I'm sorry to be so harsh with my words, but it's dumb. Somebody say it for me. It's freaking dumb. You're giving James Street too much freaking credit. They're not that powerful. So once again, I want to revisit this point. The 13F filings is for Jane Street is what really kind of kicked this off in connection with the lawsuit that was just dropped a couple of days ago by the administrator of the Terra Luna situation back in 2022. Right. So those two things sort of kicked everything off. And I just want you to understand that 13F filings show inventory. They do not show a directional bet. So don't believe any post that says, well, they're doing it to accumulate more Bitcoin at cheap prices or to accumulate more spot Bitcoin ETF shares at cheap prices. So they dump at 10, causing cascading liquidations, and they scoop up cheap IBIT shares for themselves. This is dumb. They're not in that business to make a directional trade that way. It's a basis trade. All right. So if Bitcoin drops because they have sold Bitcoin to get themselves back to a delta neutral position, right? If Bitcoin drops, they don't lose or win. That's what a delta neutral system accomplishes. They're not accumulating a position in Bitcoin. That's just how market making works, guys. When you try to stay delta neutral, up moves you don't benefit from, down moves you don't get hurt from. All right? But the key thing to understand is that the 13F is only going to show the long side. It's not obligated to show you the hedges in the derivatives market. But you don't have to see it. It's equal. It's always going to be equal, except in small moments. So if let me just say this, if Jane Street is dumping, they're dumping to get back to delta neutral. So something kind of took them off delta neutral for a moment and they have to dump to get back to delta neutral. Sometimes they have to buy to get back to delta neutral. And this is why I was saying that it works both ways. So everyone complains when it's adding pressure because they're dumping, but no one complains that when they have to get back to delta neutral by buying aggressively and causing buy pressure, no one's complaining about that side of it. Every coin has two sides. Derivatives always works for a market in both ways. But let me just tell you this. What a lot of people don't realize is that net derivatives are positive for anything that they sit on top of. So I do not want you as a part of my community to be so unsophisticated, to the point where you poo-poo derivatives and you think they're bad and they're evil and they're hurting the little guy. This is bullshit. If anything, derivatives are rocket fuel for the assets that they sit on top of. There has never been an asset on planet Earth that derivatives have not been added to, that have not gone up exponentially after they were added to. So if anything, derivatives in the long run, over time, is rocket fuel for what they are attached to. You want a derivatives market on top of Bitcoin. You want it to be very healthy, active, and attractive, because at the end of the day, derivatives drive prices higher. Of course, there are moments when it adds pressure, but net, it's a freaking positive, and it's a positive in an exponential manner. If we did not have derivatives, the future price gains would be greatly dampened. Because we have a growing, healthy derivatives market building on top of Bitcoin, you can be guaranteed that the future gains of this asset are going to be more explosive than you can probably imagine right now. It's rocket fuel. Think regular gas for your Toyota that's without derivatives, and think, oh, wait, derivatives on top, that's rocket fuel for my asset. So don't be like these bozos out here. Derivatives are bad. This is very unsophisticated. All right? All right. Here's the next point. So guys, buying spot and selling futures is how you stay delta neutral. You buy spot Bitcoin, but you also offset the buy by selling futures. This keeps you delta neutral. This is a standard practice. This has been going on for decades, guys. It's what you do in that world. This is not illegal. This is not bad. In fact, this adds depth to your market. It adds liquidity to your market. It adds sophistication and greater reliability. The fact that these practices can be pulled now on Bitcoin, they weren't always been able to do this, but they're increasingly being able to pull on Bitcoin, will attract many more hundreds of billions of dollars to Bitcoin, because now you can hedge and protect yourself. Without that, it's going to stay niche. All right. People are always looking for a villain when their portfolios are bleeding for months, guys. You know, and this is something that you have to realize, that most people out here are flopping around on crypto Twitter and assuming that narratives drive price. This is not true. Narratives do not drive price. Get this in your head. Stop looking for reasons that the price moved up and down. This is a fool's game. Do you understand? Because the narratives don't drive the price. You know what's the driver? Price drives narratives. So the price drops, and then people look for a narrative that makes sense as to why the price drops. And that's wrong 98% of the time. They look for the reason after the fact. You understand? This is sort of like the ego that arises after an experience to claim the experience. But that is false. The ego is false. And in this case, the narrative is false. Right? The narrative arises after the fact to claim ownership for why Bitcoin moved up and down. Bullshit. So, with this being said, guys, let me take a little bit of time, if I may. I don't see any questions here, right? All right. I do see your test comments, Senior Bitcoin. So let me just take a little bit of time to educate you on how authorized participants actually work. And I think this will clear up everything. So first of all, what is an AP or an authorized participant for a spot Bitcoin ETF? So first of all, let me just tell you that Jane Street is an authorized participant for BlackRock spot Bitcoin ETF. They are an authorized participant for Fidelity's spot Bitcoin ETF. I think Y Street's spot Bitcoin ETF, and someone else's. I think there's 4 or 5 of them. All right. So let me explain to you what an authorized participant is. Authorized participants are sort of like they're large institutional investors or they're basically market makers. They're approved, thus the term AP. They're approved by the ETF issuers to create and redeem ETF shares. So when someone buys the ETF, they're in the position to create the shares of the ETF. So shares are printed out of thin air by the AP. But when the person sells the IBIT shares, let's say, they are also responsible for redeeming those ETF shares. So they're operating the ETF. They play a crucial role in keeping the ETF's market price closely aligned, right, with the net asset value. So their job is Bitcoin's price is here, IBIT's price is here, IBIT's total Bitcoin is this amount. The net asset value based on the share price is 1-to-1. So the APs are hired by the ETF to maintain that balance. There are times when there's an imbalance where the net asset value is off from the share price, but that's where your APs come into play and arbitrage and bring that back into a 1-to-1 NAV or net asset value. All right. So sort of think of them as like the bridge between the ETF wrapper and the underlying asset. All right. Now, how does creation and redemption work with the AP? So when an ETF trades at a premium to their net asset value, right, the AP identifies the arbitrage. That's a money-making position for them. They kind of love when that happens, right? So much buy demand comes into the ETF that the ETF shares move a little bit ahead of the actual Bitcoin that the spot Bitcoin ETF holds. So there's a disconnect now. The net asset value, the price is above the amount of Bitcoin that they have. So enter Jane Street that potentially can close that gap and earn the spread. So APs are hired to be incentivized to bring things right back to order. Oh, the price is higher than the actual Bitcoin. Boom, they arbitrage that out. It doesn't stay, it stays there for minutes, guys. No one's going to let free money stay there for a long time. That gets arbitraged out right away. And that's the job of an AP. All right. So when the AP identifies the arbitrage opportunity, they quickly assemble a basket of underlying securities, delivers it to the ETF issuer, receives new ETF shares in return. Now, the when the ETF trades at a discount to asset value, so of all the Bitcoin that BlackRock's spot Bitcoin ETF has, sometimes the outflows will cause the price, the selling of the shares will cause the price to dip below the value of all the Bitcoin in the spot Bitcoin ETF. That's when the ETF trades at a discount. So the reverse would happen. The AP, in that case, Jane Street, buys cheap ETF shares. So this is where their holdings come, their IBIT shares come into play. They will buy the shares because the shares are trading under the value of the Bitcoin holdings. So they will come in and buy the shares, right, on the cheap, redeem them for the underlying asset, actual Bitcoin, and then they sell that. They sell the Bitcoin. This is what they're supposed to do as a responsible AP. Buy the shares when the shares get under the net asset value, then redeem the shares for actual Bitcoin, and then dump the Bitcoin to get back to delta neutral. This is not manipulation. This is a basic function of every AP for every one of the tens of thousands of ETFs in existence today. Joe Schmo on the street sees that as manipulation. Pros see that as ABC market making. Not even XYZ market making. This is basic market making. All right. So remember, some of you might remember this, but there was a twist that occurred in mid-2025. And that twist was when Bitcoin ETFs were restricted up until the mid-2025, they were restricted to cash-only creation and redemption. This is a very inefficient system. This was the system that the former SEC head, what was the guy's name again? Forget his name. You know what I'm saying. That guy said, no, we're not going to allow anyone to put real Bitcoin into the fund. It's only cash create system. And up until mid-2025, that's what it was. You could not use real Bitcoin. The APs could not use real Bitcoin. This makes a very inefficient system. All right. So this cash-only instructor was a hindrance, and it made the operation of the ETF a lot more expensive. They could not deliver or receive Bitcoin directly. Everything had to go through dollars. All right. So that extra complexity added more cost and more inefficiency. So one can say that if the activities of the APs were price and influence price, they influenced price more before they were allowed to use actual BTC, which is more efficient. All right. But now that they can use actual Bitcoin, they also, in their operations, instead of selling cash, they're selling Bitcoin sometimes to get back to delta neutral. And this is what makes it looks like they're dumping Bitcoin. No, they're just going back to delta neutral. All right. So one more time, I need you to understand this. IBIT shares gets disconnected to the holdings of the ETF and drops below the total value of the Bitcoin being held by BlackRock. That creates an arbitrage situation. Jane Street buys the cheap shares knowing that they're going to go right back to net asset value. You would too. All right. So they buy cheap shares. All right. They redeem those shares for Bitcoin. So remember, the spot Bitcoin ETF has to hold the Bitcoin. So they just bought the shares at a discount, but they're responsible for delivering real Bitcoin to the spot Bitcoin ETF for those shares. They give them Bitcoin from their end. So they sell Bitcoin to them. They redeem no, they redeem for they redeem for cash at net asset value, and then they sell the Bitcoin. So a lot of people will construe just the one part of that equation, the selling the Bitcoin, as a manipulative move, but it's not. All right. So that's the crux. When an AP needs to create new IBIT shares because of inflows, the process under the old cash create model involved buying Bitcoin spot and hedging with futures to manage the risk. And I know this is sounding a bit confusing to some of you who are listening, but this is why it's so easy to flippantly say, oh, I don't understand it. It must be manipulation, but it's not. From the outside, people see big sell volume at market open, plus Jane Street holds a ton of IBIT, and, and that equals manipulation, and it's wrong. What they're actually seeing is the mechanical hedging and inventory management that every AP does in every ETF on planet Earth. This, however, it just happens to be a bit more visible in Bitcoin. Why? Because Bitcoin trades more transparently and the community is watching tick by tick. This is why it's such a big deal in our community, because you can see it. And in other markets, you can't see it. And that's a beautiful thing. But they're just interpreting what they see in the wrong way. All right. So here's the proper way to frame this. There are three separate things getting conflated right now. The Terraform lawsuit, that lawsuit, there's actually two lawsuits that were launched against Jane Street. So there's the lawsuit with the Terraform or the Terra Luna thing from 2022. There's the SEBI India case. That's a separate regulatory action about index derivatives in India. That's the second thing. And then there's the 10 a.m. dump theory. This is an unproven internet theory based on pattern matching, right? These three things are getting conflated right now. The speculation is that Jane Street ran a systematic 10 a.m. sell program when it's just getting settling the share create from the day before and not waiting too long in the day, because every minute is extra risk because Bitcoin can rip one way or the other. All right. Now, does this lawsuit have merit? We don't know. I wouldn't doubt it. Again, guys, I'm not calling these guys saints. But if you are looking for ethics, oh, you're looking in the wrong freaking place, people. Wall Street, you're looking for ethics on Wall Street? Really? Seriously? Oh, they should be ethical. Really? Dude, let me save you a lot of misery, a lot of headache. Stop looking for Wall Street to be ethical. Stop getting upset when they do things for profit that are not quite, that are gray, not illegal, but are gray. Stop thinking they should not do that. It'll never happen. You're just going to make yourselves miserable. Ethics don't exist on Wall Street. No firm is going to be ethical with you. If there's a gray area that benefits them, they're going to play in the gray, not in the black, as long as it's not overly illegal. Some firms will go all the way to playing in, playing illegal things. I don't really think that's what's here. This is a very tight machine that is tightly regulated. And let me just tell you this last thing, all right? Jane Street's not the only AP for these spot Bitcoin ETFs. It is just one of several, many, you could say. And I'm going to tell you this. These are some very powerful firms that are APs for these spot Bitcoin ETFs. Firms like JP Morgan. Do you think they're going to allow one AP to fuck up their operations with the spot Bitcoin ETFs? Do you think they're going to allow one AP to win more than they do? To operate in a way that makes them less profitable? Do you really think they're going to allow that? You really think JP Morgan will let Jane Street do that? No. All of them would gut the hell out of Jane Street and leave them on the sidewalk. Do you understand? Jane Street can't do something that the others can't do. Jane Street can't do something the others won't do. They would get clobbered. That's not how Wall Street works. Nobody's getting away with extra unless they can wet their beak in the same way too. So guys, I say, let's think these scenarios for helping to delay maybe the price increase of Bitcoin. It is my theory, and I do have to say it's a theory, that this is your last real Bitcoin dip. And if James Street has contributed in any way to that, then I thank them. I thank anything that has helped me get more Bitcoin than I ever thought I would have. You see, people, I was wrong. I actually thought that Bitcoin would be near 200 by now, more. I thought this, I believe this. And if that were the case, if that did happen, I would have less Bitcoin today than I have now. I have more Bitcoin than I ever thought I would have because if I were right, I would have, every dollar going into Bitcoin would have gotten me dramatically less. So all this delay has done is help my future become wealthier. Because there will come a day when your little tiny weekly DCA, $100 or whatever will practically get you nothing. And you're going to yearn for the days where it got you something decent. You're going to wish you could turn the clock back to do more than you actually did when you had the opportunity. I today thank God, my personal God, for the COVID collapse in March of 2020. That gave me the greatest opportunity to make the biggest Bitcoin purchase of my life, March 13th, 12th, and 13th of 2020. I thank my personal God for China banning Bitcoin shortly after that when Bitcoin was at $64,000, dropping it to $28,000. I thank my lucky stars. I thank God for the China ban that allowed me to get more Bitcoin than I would have without that drop. I thank God for stupid ass Sam bankrupt fraud. I thank God for him. I thank him for his stupidity. I know people got hurt. That's just life. I'm sorry. But I thank him because had it not been for him and his grand stupidity and grandstanding, I would have a lot less Bitcoin than I have today. I thank God for Jane Street because if they are doing anything, if I'm wrong and they're doing anything to help suppress the price, then I thank God for them. Because today, at $67,000 of Bitcoin, I'm able to buy exponentially more every single week of my life than I would have had I been right. And Bitcoin is between $200,000 and $300,000 today. All this delay has done is made Bitcoin more scarce and made my future wealth that much greater. It is not a question of if Bitcoin goes to 1 million and beyond. It's just a question of when. I say, if we know this is the case, I say, forget price. Let your dirty fiat currency, let Bitcoin do what it wants to do. But let your dirty fiat currency meet Bitcoin where it is. If it's at 67, let your fiat currency meet it at 67. If it's at 58, let your dirty fiat currency meet it at 58. If it's at 92, let your dirty fiat currency meet it at 92. Leave Bitcoin alone. Let Bitcoin be. Just meet it wherever it is, whenever you have dirty fiat. Do that for 4 years, better 8 years, and your life will never be the same. Your future will never be the same. And I'm willing to bet if you can do that for 2 to 3 quarters or 2 to 3 cycles, your children's children's children will remember your name. This is a gift, people. We didn't get what we thought, but it's a gift. When things are delayed in financial markets, what happens on the other side of the delay is often greater than what would have happened before if there was never a delay. Thank your lucky stars. Thank your personal God for this delay. Because I believe that markets are going to be true, including the Bitcoin market. That you held back a bull And because you held the bull back longer, it got angrier. And when you let that bull out of the gate, just because you held it back a little bit longer than it should have, it is going to come out of those gates more explosively than ever before. You mark my words, right? You hold me to that. I wasn't right about price, but you don't have to be right about price. You just have to be directionally right. And I know as certain as night follows day, we've got the direction right. The direction's clear over the past 7 years. We're going higher. May not happen tomorrow, may not happen next week, may not happen next quarter, but we're going there. We've got the direction right. We'll get the prices wrong, but it's still fun to play the price game. But we'll be wrong, we'll be right with prices, but it's not being right with price predictions that make your family generationally wealthy. It is being right with direction that makes your family generationally wealthy. And we've got the direction right. So go to work. Stack harder. I love you guys to death. Ciao for now. Boom.